Good morning everyone, I'm Dr. Sharifah Farah. We are from Group 17 and today we are present our group project for Asas Perikanan dan Keuangan. Our project is a comparative financial analysis of Nestle Malaysia and Fraser and Neave Holdings Berhad, or as known as FNN Holdings, from 2023 to 2025. First, we will look at the Nestle Malaysia Berhad. It was established commercially in Malaysia in 1912 and has been publicly listed in Bursa Malaysia since 1989. One of its core strengths is its strong manufacturing and halal production capability. Nestle operates 6 factories and exports to more than 50 countries. Its first main business activity is food and beverage manufacturing. This includes household products such as Milo, Maggi, and Nescafe. The second activity is nutrition and wellness products. This includes products such as Cerelac, Netcade, and Idcal. The third activity is professional and out-of-home food and beverage solution. This focuses on business customers such as restaurant, cafe, and food service sector. Overall, Nestle has a wide product portfolio and strong brand connection in Malaysia. Next, we look at the FNN Holdings Berhad. The FNN Group traced its origins to 1883 and today operates as a major food and beverage company listed on Bursa Malaysia. Its core strength is its regional manufacturing network. FNN operates 14 manufacturing facilities across Malaysia, Thailand, and Indonesia. FNN's first main business activities is non-alcoholic beverage. This includes 100 Plus, FNN Farm Flavors, and Seasons. The second one is dairies. FNN is strong in condensed and evaporated milk products. The third activity is packed halal foods, includes convenience food, pies, and confectionery snacks, supported by Sri Nona and Coco Lane. Therefore, both companies are in the same industry, but Nestle has a broader global product portfolio, while FNN has a strong beverage, dairy, and regional manufacturing strengths. Now, I will pass to the next presenter to explain the shareholders and organizational change.
Thank you. This slide shows the main shareholders and percentage holdings of both companies in 2025. For Nestle Malaysia, the largest shareholder is Nestle SA, holding 72.61%. This shows that the Nestle Malaysia is strongly controlled by its global parent company. The second major shareholder is the Employees Provident Fund, or EPF, with 12.78%. The other shareholders hold much smaller percentages. For FNN Holdings, the largest shareholder is Fraser and Neave Limited, holding 55.475%. EPF is also a major shareholder, holding 11.680%. Amanah Saham Bumiputera holds 6.973%. From this comparison, both companies have strong major shareholders. Nestle has a more concentrated ownership under its global parent company, while FNN also has a controlling shareholder but with visible institutional shareholders such as EPF and Amanah Saham Bumiputera. Now, we look at Nestle Malaysia's organizational structure and key changes. In 2024, Nestle's organization was divided into 3 groups: corporate functions, locally managed business, and regionally and globally managed business. In 2025, the structure was streamlined into 2 main groups: corporate functions and business. This means the structure became more consolidated and easier to coordinate. There were also several key role changes. First, Raif Labaki moved from Marketing Communication Director and Coffee Business Executive Officer to Chief Marketing Officer. This shows a stronger focus on overall marketing leadership. Second, a new digital transformation lead position was introduced and held by Lim Kim Wei. This suggests that Nestle is placing more emphasis on digital transformation. Third, Nokati Mohammad Hashimi moved from the ready-to-drink portfolio to become Business Executive Officer for coffee. Overall, Nestle's organizational structure became more integrated, with clearer business coordination and stronger focus on marketing and digitalization. For FNN Holdings, several organizational changes can also be observed. First, F&B Thailand was renamed F&B Indochina. This suggests that FNN is expanding its regional business scope beyond Thailand. Second, International Markets Development was renamed International Markets. This makes the role more direct and focused on international operations. Third, Manufacturing and Supply Chain was introduced as a distinct management function. This is important because FNN relies heavily on manufacturing and distribution efficiency. Fourth, some support functions were renamed. For example, Group Finance became Finance, and Group Legal and Company Secretary became Legal and Company Secretary. There were also key senior management changes. Diana Abidin Musa was appointed Director of Corporate Planning. Suhana Bindi Abdul Halim was promoted to Director of Human Capital. Warish Patipak was appointed Technical Director. Overall, FNN structures support regional expansion, stronger manufacturing control, and long-term business growth. Next, the third presenter will discuss the net profit overview and current ratio.
Thank you. This slide shows the annual net profit of Nestle Malaysia for 2024 and 2025. In 2024, Nestle recorded a net profit of 415.623 million ringgit Malaysia. In 2025, the net profit increased to 513.031 million ringgit Malaysia. This represents a growth of 23.44%. It shows the Nestle experienced a recovery in profitability after a more challenging year in 2024. The recovery was supported by stronger domestic demand and export sales growth. The highest revenue business activity for Nestle remained food and beverages. In 2024, food and beverages contributed 77.49%, and in 2025, it increased to 79.83%. This shows that food and beverages remain the core revenue contributor for Nestle Malaysia. For F&N Holdings, net profit moved in the opposite direction. In 2024, F&N recorded a net profit of 544.308 million ringgit Malaysia. In 2025, net profit decreased to 514.671 million ringgit Malaysia. This represents a decrease of 5.44%. The decline indicates a minor contraction in profitability. This was related to planned startup investment for F&N Agri Valley and macroeconomy hit-wise in the Indo-China market. However, F&N's core business remained resilient. Its highest revenue business activity was food and beverages Malaysia, contributing 56.25% in 2024 and 57% in 2025. In summary, Nestle showed a profit recovery in 2025, while F&N remained profitable but experienced a slight decline. Now, we begin the liquidity analysis, starting with current ratio. The current ratio is calculated as current assets divided by current liabilities. It measures whether a company has enough current assets to cover its short-term obligation. For Nestle, the current ratio declined from 0.6109 times in 2023 to 0.5202 times in 2025. The ratio stayed below 1.0 throughout the 3 years. This means Nestle's current liabilities were higher than its current assets, showing a tight working capital position. For F&N, the current ratio also declined from 2.9499 times in 2023 and 2.0111 times in 2025. Although the ratio decreased, F&N still had about 2 ringgit Malaysia of current assets for every 1 ringgit Malaysia of current liabilities in 2025. Therefore, based on current ratio, F&N has a much stronger short-term liquidity position than Nestle. Next, the floor presenter will continue with quick ratio and operational efficiency.
Thank you. The next liquidity ratio is the asset test ratio, also known as the quick ratio. The quick ratio is more strict than the current ratio because it excludes inventories from current assets. It's because inventory may take longer time to convert into cash. For FN, the quick ratio declined from 2.0515 times in 2023 to 1.3766 times in 2025. Although it declined, the ratio remained above 1.0. This means FN and quick access were still sufficient to cover current liabilities. For Nestle, the quick ratio fell from 0.222 times in 2023 to 0.1899 times in 2025. It shows that Nestle had a very limited immediate liquidity buffer. Therefore, Nestle depends more heavily on inventory sales, receivable collection, and operating cash flow to meet short-term obligations. Let's look at operational efficiency using receivable turnover and inventory turnover. Receivables turnover measures how fast the company collects money from customers. Inventory turnover measures how fast the company sells and replaces inventory. Nestle recorded high receivables turnover than FAN. In 2025, Nestle receivables turnover was about 14.87 times, while FAN was about 5.93 times. This suggests Nestle collected receivables faster. Nestle also recorded a higher inventory turnover in 2025. Nestle inventory turnover was about 5.53 times, compared with FAN is 4.75 times. This helps explain why Nestle can still operate with lower liquidity ratios, faster receivable collection, and inventory movement partly support cash flow. For FAN, the lower receivables turnover suggests lower collection or a larger receivables balance. This slide summarizes the liquidity comparison. Nestle follow a more aggressive approach. It operates with a current ratio below 1.0, which means current obligation exceeds short-term assets. However, Nestle partly offsets this through higher receivables turnover and faster inventory turnover. F&N follows a more defensive approach. It has a stronger liquidity buffer with a current ratio above 2.0 and a quick ratio above 1.0 in 2025. In 2025, F&N recorded a current ratio of 2.0 times and a quick ratio of 1.3766 times. In comparison, Nestle recorded a current ratio of 0.5202 times and a quick ratio of 0.1899 times. Therefore, for liquidity, F&N is clearly stronger. Although F&N's liquidity ratios declined from 2023 to 2025, they remain at more comfortable levels than Nestle. Next, the fifth presenter will discuss profitability.
Now I will present the profitability analysis. First, we look at net profit margin. Net profit margin measures how much profit the company earns from each ringgit of revenue. F&N had a higher net profit margin in all 3 years. Its margin declined gradually from 10.84% in 2023 to 9.9% in 2025, but it still remained higher than Nestle. Nestle net profit margin fell from 9.36% in 2023 to 6.68% in 2024. before partially recovering to 7.46% in 2025. This means F&N was more efficient in converting sales into net profit, while Nestle experienced a sharper decline in 2024. Next, asset turnover measures how efficiently a company uses its asset to generate revenue. Nestle maintained a higher asset turnover throughout the period. In 2025, Nestle asset turnover was 1.89 times, while F&N was 0.94 times. This shows that Nestle generated more revenue from each ringgit of asset. Next, we look at return on asset and return on equity. Return on asset or ROA shows how much profit is generated from total asset. Return on equity or ROE shows how much profit is generated from shareholders' equity. For Nestle, ROA and ROE fell considerably in 2024 before recovering in 2025. However, both remain below their 2023 levels. For F&N, ROA and ROE declined gradually across the 3 years. This indicates a steady weakening in returns generated from asset and shareholders' equity. Nestle maintained the higher ROA and ROE, but its high ROE should be interpreted carefully because it is influenced by high financial leverage and a relatively small equity base. This slide summarizes the profitability comparison. For F&N, the main change is net profit margin. F&N maintained a higher net profit margin in all 3 years, showing stronger profit earned from each ringgit of revenue. However, F&N profitability weakened gradually from 2023 to 2025. For Nestle, the main change is ROA and ROE. Nestle recorded higher ROA and ROE, showing stronger return generated from its asset and equity. However, Nestle experienced a major decline in 2024, followed by only a partial recovery in 2025. Its high ROE is also partly influenced by high leverage. Therefore, the profitability result is mixed. F&N is stronger in net profit margin, while Nestle is stronger in ROA and ROE. Next, the sixth presenter will discuss solvency ratio.
Thank you, my friend. Now I will present the solvency analysis. Solvency measures a company liabilities to meet long-term obligation and manage financial risks. The first ratio is total liabilities to assets ratio. It is calculated as total liabilities divided by total assets. For Nestle, the ratio stays high at around 84%. This means that approximately 84% of Nestle's total assets were financed by liabilities. This indicates that Nestle used a highly leveraged financial structure. For F&N, the ratio was much lower. In 2025, around 69% of F&N assets were supported by equity. This shows that F&N had a more conservative solvency profile and a stronger equity buffer. Therefore, based on total liabilities to assets ratio, F&N is less financially leveraged than Nestle. Next, we look at coverage and leverage. The first ratio is interest coverage. It measures how many times the company's earnings can cover its finance costs. A higher ratio means the company has stronger ability to pay interest. According to data, for interest coverage, F&N improved steadily to 21 times in 2025, while Nestle fluctuated ending lower at 12.5 times. The next ratio is debt to equity ratio. F&N debt to equity ratio in 2025 was a conservative 0.45, while Nestle was much higher at 5.32. This means Nestle rely more heavily on liabilities compared with equity, while F&N maintain a more conservative capital structure. Next, the final presenter will synthesize the solvency result and present the overall conclusion.
This slide summarizes the structural solvency risk of both companies. For F&N, the first strand is lower leverage. F&N maintains substantially lower liabilities to asset and debt to equity ratio than Nestle. The second strand is strong coverage. Its interest coverage improved steadily and reached approximately 21.12 times in 2025. This means F&N had a strong buffer to coverage financial costs. The third strand is the larger equity buffer. A greater proportion of F&N assets was supported by equity, which improved stronger financial flexibility. For Nestle, the main issue is higher leverage. Nestle maintained a debt to equity ratio above 5 times in 2025. However, Nestle's interest coverage was still adequate. Its coverage rate in 2024 but recovered to approximately 12.56 times in 2025. This shows that Nestle could still cover its financial costs, but its higher leverage increased as sensitively to weaker in earning or higher financial costs. Therefore, in terms of solvency, F&N is stronger because it has lower leverage, stronger coverage, and a larger equity buffer. Finally, this is our overall conclusion. Based on our analysis, F&N is financially healthier overall. For liquidity, F&N is clearly stronger. In 2025, F&N recorded a current ratio of 2.0111 times and a quick ratio of 1.3766 times. In comparison, Nestle's current ratio was only 0.5202 times and its quick ratio was only 0.1899 times. For solvency, F&N is also stronger. F&N had lower financial leverage and better interest coverage. This gives the company a stronger buffer against short-term obligation and financial uncertainty. For profitability, the result is mixed. F&N had higher net profit margin in all 3 years, while Nestle generated higher ROA and ROE. However, Nestle's high ROE must be interpreted together with its higher leverage and smaller equity base. Therefore, F&N provides the stronger overall balance between liquidity and solvency. Nestle remains profitable and generates strong returns, but its low liquidity ratio and highly leveraged capital structure expose it to greater financial risk. That concludes our presentation. Thank you for listening.